Great. Thank you all for joining us after lunch on the session of what VCs are looking for from founders. So we've got 3 military veteran VCs, Paul Madera, Jim Stallings, Lior Susan, and they've got a ton of venture experience. And this session, I'm super excited because it's candid feedback, veteran VCs to veteran founders. I'd like to kick off with first, please introducing yourself, and maybe we'll go from Jim to Lior to Paul.
Test 1, 2. Can we hear me? So I'm Jim Stallings. I run a firm called PS27 Ventures. We're early stage investors, seed level funding, $500,000 to about $1 million. We like companies that are across multiple industries. We invest in SaaS platforms. We like CPG, fintech. I'm always fascinated with wellness-oriented products myself, so we invest in those. We like companies that are in market with some customers. They've got some traction. We're typically the first institutional money into the company. One of the unique things that we do with our fund is we post-investment, we create a model around the founder and their core team to help them begin to grow. We help them with recruiting. We help them with legal matters. We help them with accounting, building all of the back office. We help them build a board of directors. We actually require them to build a board of directors. So we invest the capital, but we also invest a lot of value as we go. So we started our first fund about 3 years ago. We're about to close it. We're going to launch our new fund last month. I started as an angel investor. I left the Marine Corps, went to the Naval Academy, went to the Marine Corps, and came out. I was an infantry officer, platoon commander, company commander, and went to work at the IBM company and fell in love with technology, and I've been sort of enthralled with tech ever since. So, is that okay? Is that sufficient for a Marine? Perfect. Okay, good.
Amazing. And Jim just commented I'm not wearing socks, and I was like, this is like how the Gen Z people are going right now. Lior Susan, originally from Israel, started my career in the military, went to the Special Forces, was there between 2000 and 2008, finished as a captain in 2008 to do a software-defined network company with my young brother. Cisco bought us in 2012, and I arrived to the Bay Area as part of it. Joined Mike McNamara while he was the CEO of a company called Flextronics for 3.5 years, and I left in beginning of 2015 to start Eclipse. We are now $4.3 billion under management, I know. And we build and invest in in companies in the intersection between technology and physical world. So we are looking on in industries like manufacturing, industrial, energy, defense. I like to say when bits meeting atoms, this is where we shine. We are all operators. We can swing from seed to Series A to Series B to Series C. So we actually can do the whole stack. The only caveat is we only lead. So we have been extremely involved in the companies that we are investing in a very few companies every year. And a good year for us will be 6-7 deals total. And we're trying to give as much as we can from our time to those companies. And I'm trying to be Paul when I grow up.
Right. Let me tell you, this guy's a superstar in Silicon Valley, just so you know, the right context. By the way, before I talk a little bit, I do want to say thank you to Tim. And I say that because I have been in this investing business for many years now. And for so many years, I felt alone as the military guy that was just a little bit of an oddity on the walls. But Tim has brought our community together in a way that is truly spectacular and unique here. Thank you very much, Tim. And this was after he started Service to School, which I know we have a couple of folks that have benefited from that program here, but there are so many more out there and many more to come who will benefit from Tim's early nonprofit, got nothing out of it work. Thank you, Tim. So I grew up in a Navy family and because my dad was a career naval officer, sub-commander, we went around to Navy bases. And as a young kid, I got to see F-4s flying over Kaneohe Marine Corps Air Station. and I knew I wanted to fly airplanes, so I tried to figure out the best way to get into a fighter cockpit. It was the Air Force Academy, so I went there, and from there was able to fly for 10 years on active duty. Went off to business school, found myself on Wall Street afterwards, working for a big bank, and then made my way back out to the West Coast, where I got to do some work with a smaller investment bank. And in '99, I slipped through a very narrow window where bankers could become investors. And we started Meritech Capital way back then, and now we're on our 7th fund, and continuing to invest in later stage tech companies for the most part. And so what we do is look for the companies that Lior has funded early on, and or Jim has funded early on, and or Tim has funded early on, and other respected groups as investors, and try to provide a round of capital. Typically our companies are between 10 to 30 to 40 million in terms of run rate, and they're headed for an IPO, so there's a large TAM and there's a large potential outcome.
Paul was my hype man, so I'm going to try to be Paul's hype man. A few things that he didn't mention is Meritech has invested in Roblox, Facebook, Salesforce, and many other fantastic companies. And Paul's been a tremendous mentor to a ton of military veteran founders and investors. Can you all talk about what you all do day to day? And I bring this up because someone told me that for a while, Lior, you were also the CEO of a company, and that you were very, not just what you said, hands-on, but operationally hands-on.
Yeah, I mean, I think being an operator is like being a veteran. It's never leave you. It's kind of inside you, and you have these days that you're like, dang, I just want to go do something, or I feel like I'm so passionate about this thing that I will have more than one day job if needed. Different conversation with the wife of time commitments. But yeah, I know it's not probably at the business schools what you will be learned, that in the books like, oh, you need to focus on one thing and a good old discipline and swim in one lane. I'm just obsessive about that particular company, and I told my team, hey, I'm going to be the CEO of that company while I'm also the CEO of the firm.
And Jim, you also have multiple duties. You're public board director. Can you talk about your day-to-day and other things you work on?
Yeah, one of the great things about this job is there's no day that's the same. I mean, it never repeats itself. I mean, there's a crisis one day, then there's great news another day. But we've carved up my time in sort of chunks of days each week. On Monday, we tend to meet internally about everything going on with the fund, all the operational issues that you have to do to manage and run a fund, manage people. We run our investment committee on Mondays. We look at everything that's come through the pipeline, all the deals. We've spent hours on painstakingly going through what we understand as the most promising opportunities. But that's Monday. Tuesday, we outreach to the founders. I spend a lot of time with our LPs, talking to them about the progress of activity, keeping them up to date on what's going on with the companies themselves. Wednesday, I dedicate typically to my public boards. I chair several committees on 2 public company boards. I'm always on some of the company boards that we invest in. Part of what we require when we form the board is that one of our members, our teammates, are on the board. So I spend that. Thursday, we catch up on a lot of things. And the unique thing about what we do with our founders is Friday, which was today, and I missed it today, but on Friday, we have this rapid-fire cadence with the founders that in the portfolio. They call in. It's a 30-minute high-speed discussion about how things are going, what's working, what's not working, what do you need. Another team comes on in 30 minutes. And that's how we keep our finger on the pulse of what's happening in the field with the founders. So I grew up as an operator. I love running stuff. Sometimes the founders don't like me running stuff, but it's sort of in your blood when you do that. But it's also very valuable to the founder because you can help them understand some things that they will run into, help them anticipate it, but let them go solve it. But that's my week.
So I'm probably 50-50 in terms of looking for new opportunities and 50% managing through existing investments. And so the half that's looking is always talking to portfolio companies to hear what's interesting, what products they're using. And then the half we're advising really centers around the issues that later stage companies have, which are a lot different than the early stage where you're trying to find your strategy, perfect the product, hire competent people just to do the basics, and that's a tremendous amount of work. We have less, but it's a different form, where you're trying to get ready for a public offering, trying to hone the message to the investment community, banking community, and/or upgrade personnel at times when you have to.
During our prep call, we mentioned how sometimes founders lump VCs into just this one bucket, but we're actually like very, very different. And as I look across, there's regional focus, there's hardware focus, there's software focus, there's stage differences. Can you all narrow in on some of those aspects that these founders should know about your fund?
I'm going first. I mean, I think for us, it's I think you need to be special in something in this world, and I think it's because it's becoming so wide, and there is so many opportunities: geography, technology, industry, stage. For me, what I tell founders, what I tell my kids, what I tell myself is like, what is my 10x, and I'm going to focus on that rather than trying to do something else. My passion, my 10x is those industrial industries. I love building companies that building full stack. There is always a hardware in the mix, or semiconductors, or batteries, or something, bits and atoms, and that's what we do. That's the only thing we do. It's not the best, it's not perfect, it's not the greatest, but it's just what we are passionate about, and we're trying to focus on what we know. We know nothing on fintech, and we know nothing on cyber, we know nothing on crypto, and long list of other things, so we just narrow to, hey, if it's a technology meeting a physical industry, we think we'll be the best partner for you.
I think I've also heard that you all might even start companies, and I've also heard that and so I'd be curious if that's the case, and also how much do you do defense tech dual use? Because there's been a lot of talk about that over the past 2 days.
Yeah, first question, yeah, we, from a region of the firm, again, unique to us is we're an operators, and I didn't want to stop operate just because I also have the investor hat, and as a result of that, we built 12 out of our 53 companies till today. So about 20%. Defense tech, yeah, we did a few companies in the defense market. I personally, you know, it's funny to see those YC kids high-fiving, I'm going to save the battlefield, and all of the big Wall Street Journal coverage of the Silicon Valley coming to save defense and things like that. I'm a little bit like, hey, this is not a fun place. Technology is going to play already playing an important role. I do believe there is a lot of innovation. I do struggle with the primes, all of that, but I'm trying to temper a little bit the, this is not a crypto movement type of a thing. This is, at the end of the day, deal with people life in the field.
Yeah, I mean, in early stage, you've heard the adage, it's all about the founder. When investors will say that a lot. In early stage, it's really all about the founder, because in many cases, that's all you got. You know, we give them some money, it's the founder and 2 other people. So we are really focused on making sure the teams we work with, the founders we work with, they're really good at a couple things. And it's probably more important than what they're building. Number one is, do they know anything about what they're building? Do they come from the industry? Are they a subject matter expert? Have they worked in a business before that saw this problem? The business may not have solved the problem. They quit and said, I'm going to go solve that problem. We love those purpose-driven founders that say, I'm going to fix it. Nobody else will in the world. Or they've had an experience in their life and endured some challenge, and they want to create a solution to fix that, not just for them, but for millions of other people. So we're looking for those people driven by something to solve, a big problem to solve out there. The other thing we're looking for are founders that can attract other people, talent, Because again, you've got 3, 4 people on the team, maybe 6, maybe 8. We inject capital. Your intent is to scale, not just scale the business, but scale your infrastructure and your team. And we're really focused on, can you draw in smart, talented, capable people that are complementary to what you can do? Not just people that look like, sound like, act like you, but people that can bring something that you can't, that you don't offer initially. So we're really, really hyper-focused on those 2 things. Now, if you get through that, then the economics, the financials, those things matter just as much. But if you can't get through that gate, it's hard for us to make a call. But that's what we spend most of our time on, the founders.
And do you have a regional focus?
No, we invest all over the country.
So we invest all over the country and internationally, and we're looking across all of technology, so it can be hardware, software, even a little medical device, but about 2/3 is subscription software that sells to enterprises. And by the way, if any of you here are software companies and are looking for good metrics, I'll plug our website, www.meritechcapital.com. We actually have a current set of stats looking at the largest subscription software companies that are publicly traded that you can look at and pull that data off, free to use, no problem. We have a little bit easier job than these gentlemen do. We can look at how fast companies are growing. What kind of margins do you have? What kind of business model do you have? How efficient is your sales and go-to-market effort? And so that's a little easier to judge. And in general, we have to pay much higher prices, which we're happy to do for the companies that are within our criteria.
I want to plug the Meritech blog. Recently, they posted something that was really fascinating, which is that the larger the company, the higher the multiple. And with scale, you actually get multiple increases. And that's interesting as an early stage investor, because typically you're like, oh, you see a pre-seed company and they're like, oh, I want 20x revenue. And you're like, wait a second, that doesn't make too much sense sometimes. How do the best founders raise capital? And can you share some strategies and tactics for fundraising?
Say that again, Ted.
Yes, sorry. How do the best founders raise capital, or how do they go about raising capital?
Oh, okay.
And what are some strategies and tactics that you advise the founders in this audience for fundraising?
So we're, of course, later stage. Companies have a little more mass. They have people and so forth. I have a couple of comments, and one is that it is surprising to me how professional these decks have gotten, even for earlier companies in our space. In fact, I will tell you, as a former banker taking companies public back in the 90s, the decks that we used back then are not quite as sophisticated as what we see from startups these days. So looking professional is really, really important. One thing you shouldn't do, by the way, is send out those blast emails to everybody that says you're about to raise some money, and all you need to do is click on a one-pager and then send your money in. We all get a few of those every day, and we don't pay a lot of attention to them. Mm-hmm. In terms of what does work, I would recommend you need to be an expert in your space. Whatever your sector is, you need to know everything about it. You need to know what the dynamics are, what the competition is doing, how do you compare, why are you superior, and be able to articulate that very clearly. In addition, you need to prove that you have a large total available market, and then you need, at least for us late stagers, you need to show us that your business model is in fact working. You have good gross margins, you are efficient in going to the market, and the last thing is, I think you need to be a little bit crazy. In all sincerity, the biggest outcomes in the tech space have been led by crazy entrepreneurs, and they are a little bit off. Now, they don't have to be totally wacko, but you have to be a little bit irrational to do what you're doing as entrepreneurs, and then to pursue it even when everyone else tells you that it's not going to work out and that it's too hard and you should quit.
Yeah, one of the things that we we like to do with the founders is we've got a process. So once they get through an initial filter, one of our analysts will reach out to them, and they read the deck. Our team will read all the decks that come in. We have a rule that you get an answer back, regardless whether we decide to invest or not. You always get and we just believe in customer service and response. Remember, we're working with early stage founders. This is in the formative stage of their life and company sometimes, and we want to be respectful. So we do that. But if they get through that process of sort of a high-level analysis, we do something called a deal review. The deal review is myself and a couple other people on the investment committee. And in the old days, we used to do it in person. Now it's on Zoom. But the founder typically, once we tee it up, and we only spend 30, 45 minutes on these deal reviews, they want to go into a presentation. They ask, can we share the deck? We said, nope, no decks. Yeah, we'd like to show you the deck. No decks. So one of the things we always look for is, can the founder talk about the business with no charts, no presentations, no financials? Do you know the business? It's your business. Do you know it? Can you describe it to me, help me understand it without any illustrations, graphics? Because our belief is, at the early stage, you got to be crazy, but it's got to be in your soul. And you got to understand it to that level. The financials, the market, the competition, by name, in that review. So if you get through that, then we have something that's a financial review where we do a deep dive, and then much later in it, we do something called a workout, which is a 4-hour session, no charts, with their team. So their CFO is there, the CTO is there, and the expectation is if you really, really believe this, you will know this better than anybody else. And if you can't describe it to that level, and we got all military people here, you understand exactly what I'm talking about. If the mission is here, the belief is here, and you've got to convey that to some other people. We love those founders that come in and say, look, I just want to talk to you. I want to tell you. And you walk away with the passion that they bring to the room, you know you got something.
Yeah, I had a call over the break with Jensen, and we talked about this notion that he's doing that for 36 years. And kind of the notion that this is an overnight success, and this is like 36 years of grind, and there is zero chance, if you are not absolutely insane, absolutely passionate about this problem, ruthless of like hitting walls after walls, I'm sure you have the stories from the companies you guys worked with, but 5 times nears bankruptcy, 1 month of cash, biggest customers cancel the contract. Each of those companies have it. And then, it's kind of, you look through our job, you look through the nice decks and charts, and you're like, hey, is this person have what it takes to be 36 years in the grind to potentially become 1.6 trillion or whatever is the market cap today?
It's been rough for founders seeking capital the past few years, especially 2023. And then obviously there's a big hype cycle in 2020, 2021. How do you feel the market is where do you feel the market is headed? Do you feel VCs are feeling bullish or bearish? And then how do you personally feel?
I'll start. So for later stage, it has been pretty quiet. So many companies raised money at high prices. They still have a lot to burn through. They haven't quite come back to market. And the values come down, which they know. So they're not coming back to market anytime soon. And so as a result, we haven't been doing a lot of investing. And we're waiting for the next group of companies that Jim and Lior send us because they'll be coming up pretty quickly. As far as the outlook for later stage in general, we do want to see a very active liquidity market. We want to see M&A pick up. We want to see the IPO markets open back up. We think that potentially happens later this year, as long as the indices keep going up, inflation, or I should say the Fed rate goes down, the market should open back up again with a healthy economic outlook. And then we will see our later stage activity pick up.
Yeah, I would say in general, I'm just maybe it's the type of companies I love building. It's that there is no shortcuts, and I think in 21 people felt like there is a shortcut, and you get 4 rounds in a row, month after month, because there is some crossover money, and it's like this one side of the valuation, and you're just like ripping new term sheets, and you have 8 term sheets to choose from. I just don't believe that, this is the norm. I actually think the norm, it's hard to raise money. And the norm, it's hard to build companies. And yeah, inflation will go down. I hope that the feds will make a couple of clicks to help us flush more capital into the market. I think there is another huge things, at least in this country, that I'm concerned about, and not only in this country, in general. If you just zoom out to the macro, you're seeing much more regulation on M&A. So meaning, we just had iRobot blocked and Amazon pulling back. We had Figma and Adobe deals not going through. We had the Visa, blank now on the company name. Yes, Plaid. This is not good for this business. At the end of the day, I tell CEOs is you have a 0 control on the macro, 0. You have only control on your business. You do not know what the feds will do. But I think when I'm taking a step back and I'm like looking on the outlook, I'm like between the macro in the world in general, plus this tightening in the ability for an M&A, I think liquidity will be tough.
Yeah. On the early stage side, 2 things. The valuations are down and the quality is up. And part of that is because in 2021, a lot of companies started up, in the middle of the pandemic, and a lot of companies got funded. Many of those companies ran out of money last year, and companies that did survive are coming back through looking for either an extension on a seed round or they're going to an A round. They figured out how to make money, how to get cash flow positive last year. And that was a big test, right in the middle of high inflation, a lot of job challenges, just finding people last year. So if they got through that, they are a high-quality founder, and we are very, very attracted to them. But the valuations have definitely come down. We're beginning to see more volume pick back up because those companies that survived are back in market, asking for capital. And some of the founders that didn't make it in 2023 are recycling back onto other teams, and they're coming back through. So we think 24 is going to be an uplift in terms of capital-seeking founders, but also capital going back out.
2 quick notes and then a question. First is, last year Paul was on stage and he mentioned, someone asked him how to become a veteran VC and how to become a VC. And Paul noted that it might sound great to be a VC, but there will be years, if not decades, where you don't get any carry. And then the second thing associated with that is recently I read a post and someone said, oh, if entrepreneurship is a marathon, venture is maybe an ultra marathon because of these cycles. And so the question is, what are 2 to 3 investments that completely turned out differently than how you thought it would be? Whether it was like you thought this was going to be a slam dunk and it turned out terrible, or the other way, like, you weren't sure and then it just pivoted and turned out great.
What a good question. Before we go into that, can I just ask the audience, I think of us as kind of fitting into 2 categories, either entrepreneurs or investors. Who can show of hands, who would be an entrepreneur here or at a startup?
Mostly. Okay.
Okay, and how many of you would be investors? Some side. Wow, not many at all. Okay. All right, well, that's helpful. So we can tune our remarks. So I'll give you a great example of that. So we invested in Facebook back in early 2006. Got to meet Mark Zuckerberg in 2005, looked over the business. It was running at about 10 million annual run rate, and they wanted the unheard of price of 500 million, mainly because MySpace had just gotten acquired by Fox Interactive for 500 million right before we invested. And as we invested, they had all of 30 colleges on the platform. They were making money from essentially 2 things. They were selling credit card ads and they had sort of a virtual bulletin board where students could find roommates or sell their bikes at the end of the term. And all of that was generating $10 million. Well, after about a year to a year and a half, they were still generating $10 million from essentially the same thing. And Yahoo came along and wanted to buy the company for about double the price, $1 billion. And I will tell you, us investors all looked at each other and thought, that's a pretty good deal. And we actually tried to convince Mark Zuckerberg to do it. And I'm kind of embarrassed to say that, but it didn't look like the business was progressing. And in fact, there was one point where I know the stats were that it cost 4 times the revenue that we were getting from each individual user economics. The price was 4x that just to keep each individual site operating and available. So unit economics were upside down. We weren't seeing any growth. We were going to make a 2x that kind of made sense. But then Yahoo came back and said, you know what, we had a bad quarter. We've got to lower the price to $900 million. So we turned that down, and very fortunately, the next thing Facebook did was bring on Sheryl Sandberg, who brought a real business sense and model to the company, and she's the one who made it work the way it did. They both changed the product, changed the way they generated revenue, and of course, today it's worth many, nearly
I was just checking. That's why I pulled out my phone. 1.2 billion market cap.
trillion.
Well, 1.2 trillion.
It's 1 digit.
Any pivots, any kind of companies you all have seen, Lior, Jim, that you're like, hey, I thought this would turn out very different?
Yeah, well, an early stage is 2 points here. This term pivot, you tend to think of it as, well, that didn't work, I screwed up, I got to pivot. In the early stage world, you got to pivot all the time. I mean, that's what it is. You got to adapt, you've got to change. You're in the beginning of a movement, and you got to shake and run here. So pivot isn't a bad thing at our stage. I mean, nothing like Facebook, but so we actually encourage that with the founders. I mean, try it. If it's not working, try the next thing. If it's not working, try. I mean, just you got to work through till you find the rat hole, and then you pour on the gas and you go through. So right in the middle of a pandemic, there was a company that came to us. We'd had a very successful all natural organic spice company that was doing extremely well. They were on Amazon. And we had another CPG company come to us. It was in July of 2021. Right, I mean, it was in the heart of the pandemic. And we're thinking, okay, we've learned something about online distribution, Amazon, all of that. So maybe we can apply it to this CPG company. And it was 2 co-founders out of the Boston area reached out to us. And we had just launched this fund. We were thinking, okay, we'll just repeat the success, but let's take our time because we're in the middle of a pandemic. And this company, it was a coffee-related company. And we said, this is probably a $10 million thing. So let's price it like a $10 million thing. And they figured out some things with Facebook, with online marketing. In 2022, they did $20 million. And we were, boy, that's great. This is a great online thing. We priced it at $10 million. This is fantastic. In 2023, they did $230 million. So I said, boy, this is a great thing. But I reel back to our early investments, and the other day I looked at the memo that we wrote on this company. We thought the best this thing would ever do is about $75 million. And now they're running on a run rate this year, probably $450 million. So it was one of those things where our expectation wasn't in the right place. The founder all along was saying, I got something here. And we're saying, look, you just take your time, you'll be okay. But they tapped into something where the pandemic, where everybody was online shopping, and they caught a wave with marketing with Facebook's help that just surpassed all of our expectations. So you never know. I mean, you think you got something big, sometimes it can be even bigger than you ever imagined.
I'm going to give the other side. Also, we'll end up at Facebook, but not in the area that's making money. We had an amazing team out of Square and Apple doing software-defined network, building a new type of long-range internet access, doing this really, really clever SDN. And we loved the team. And, you know, they were like one of the better teams I ever met at Seed. Like super smart, understand the business, 4 co-founders, 2 females, 2 males, an amazing complementary on skills. Oh, like, this is going to be one of the greatest. And probably the learning here, it was an area that I know fairly well. That I think I would say ignorance can be a gift in this business. When you think that you know something, it's dangerous. So we led the seed and to start building the network. They immediately roll in San Francisco. That thing is up to the right. Everyone is using it. It works amazingly. It's competing with fiber. It's over there, really great. They are launching Oakland or Alameda, I can't remember. One of them flying. Raising a really strong Series A. We are preempting that as well with another great, amazing Sandhill firm, working to expand to Arizona. Launching in Arizona, and there is an issues. And the metrics is not what we hope it's going to be. And the company starts spending more and more of the cash that they raised on this Arizona. We are deciding at some point to chop the Arizona and retrieve back to the base here in San Francisco. It was too late from a coach point of view. We bridged the company, but was not enough in order to show any metrics that another investor will want to do. And we actually did an asset sale to Facebook, and that team is currently at Facebook. But I think it's, for me, the learning there, it was even with an amazing, I will back those 4 people all day long again. So even with amazing founders that you know really well, you just get bad cards in this game, and you're like, end of story.
I will quickly insert a story from our end. As you all know, we invested in a company called Wove. They're out there. They're a jewelry company, and they make custom engagement rings. And for a while, the company was treading water. We had invested in 2 military veteran founders. They started because they're like, hey, we have soldiers who are in Afghanistan that are going to propose. They want custom engagement rings. And we're like, okay, great. They know this space. We backed them. One of them decided to go to business school just because they're just like, hey, this is too stressful. The other one saw that happen, was like, maybe I need to do that too. Then we had to go find a new CEO. And then, however, though, in the past few weeks, because of Travis Kelce and Taylor Swift, they wore their jewelry. And so now the company is like on fire in a great way. We'll see how long that sticks, but it's just like this company has continuously kind of been going through just changes, and it's just unpredictable. I have a few more questions, but I'm going to open up to the audience soon. So if you have a question, please line up behind one of 2 mics. My question is, what advice do you have for military veteran founders? How much specifically should you wear that on your sleeve? How much should you not? Should you think, you know, at the end of the day, we all need to build great businesses, but how should you posture your military background, if at all?
I mean, I think it's, I don't think it's something to advertise. I think it's who you are. I don't see a reason why to pump it out or why to hide it. This is part of my personality, big part of my personality. I think I dropped off from high school, so I don't have the great, I know by story what great US Ivy League schools can give you, but I will still make the call that, you know, veterans getting one of the most important tools as an entrepreneur is leadership, ambition, focus, the ability to operate under a lot of stress. That the similarity between being a soldier and being an entrepreneur, there is a ton of it. So you have the skill already. I don't think I don't know if it's something I will necessarily put on my posters as like, hey, give me money because I'm a veteran.
I personally love it. It makes my day when I get military veterans coming in. Because as we know, unlike Israel, where everybody is a military veteran, it's pretty rare to see around here. And so I get quite excited for all the reasons Lior just talked about in terms of experience, in terms of grit, in terms of focus, in terms of really being determined to make something happen, which I know you all are.
Yeah, I feel the same way. It's a big boost for me when I live in Jacksonville, where there's several Navy bases around, and I get to bump into vets, and I always make time. We get deal flow from all over the country, all around the world, and every time there's a veteran, at least they identify themselves as a veteran, we always, review the deal, and we always give them some kind of encouragement and response back. I think veterans many times underestimate their capabilities, and you have to make sure you understand your capabilities and try to match yourself up to right opportunities. Just as the other gentleman said, vets come with this incredible ability to handle chaos, and startups is chaos. You have to bring a set of some calmness to everything else is on fire, and you, the leader, stand tall, and people have to listen to or will listen to you if you keep your head about you. You learn how to do that in the military. It's just a part of what you train to do. And you're just a natural leader. You know how to take charge of situations. And you also know, and this is a great advantage vets have with early stage in entrepreneurship, is you never have enough resources. None of us ever had enough resources in the military. You were underfed, underpaid, trooped, everywhere you went. Choppers and jets never showed up on time, okay? So you know how to deal with environments where you have to be frugal and deliberate about resources and helping the people understand why that's important. So you can leverage that. The other side of that, though, is no one's going to give you a job or give you a shot or give you any money just because you're a veteran. You've got to bring something else to the table, some skill, some knowledge, some expertise in a domain, hardware, software, something. It can't be, my skill is vet. That's just not enough. But people do respect the fact that you have these other capabilities, and if you get the opportunity, you're going to really lift the organization to another level.
Scott. Probably not. Oh, wait, there we go. Hey, Scott Patterson. I'm the founder of Tumble. Lior, Tim has already forwarded my deck to you. So my question is actually on pipeline management. And so it's a little bit different by stage, right? So, by the time Paul is looking at companies, there's probably a lot less than, say, Lior, who's getting absolutely destroyed. His email inbox is a nightmare.
100%.
And then Jim, probably same sort of thing. There's probably kind of a scale to this. How do you manage that pipeline? Do you have a framework for kind of moving things through quickly and efficiently? And then sort of the second part of that question is, I've been known to show up in VC's lobbies and just sit there until you pay attention to me. How much of a nude should I be, in following up and moving that process along?
Yeah, we have a security guard. And you need a code downstairs.
I've been there.
Yeah, exactly.
There is.
I'll tell you what, last year we saw about 4,000 companies. And, I'm a CEO of a company. I have 50 companies in the portfolio, and I'm managing 26 people at Eclipse, and I have a fairly crazy wife and kids. That shit is so fast, and so you're in the fire hose constantly. At Eclipse, we have a zero email policy, meaning I'm not letting people go to bed before they clean the inbox and steal. It's just madness. I swear to God that we want to do good by founder. We are founders. We want to get back to everyone. We want to try to provide an advice of why it's passed, because we are going to pass on 99.9% of the things we'll see. and we not always doing a good job. Actually, usually we'll not do a good job with that.
Yeah, the way we deal with it is everybody on the investment team is an analyst, including myself. And to handle the volume, that's how we hand it off. Particularly if someone's on vacation or I'm traveling or whatever, everybody's conscious of we're going to clear the inbox every single day with our founders. And we double up, triple up, but everybody does analyst reviews, meaning we reach out, ask questions, respond, get a reply back, and we decide yes or no fairly quickly. So that's the only way we do it. And if you're ever going to work in our firm, the first job you're going to get is to be an analyst. It's sort of like being a truck driver. You're going to start at the front of the office, so you understand what people are asking for, the language of founders, the requirement to be responsive. So we just spread it across the entire team to make sure we keep up with it. And it's hard to do that if you really believe in customer service, but that's how we cover it.
I don't have a lot to add. These are smart guys here.
Charles Masters Rodriguez, founder and CEO of MK3 Industries. First of all, thank you all for being here. It's been very insightful. My question, today's day and age, we're seeing more solo founders with AI and technology. I have two parts to this question. Are you seeing a lot more solo founders get funding? And if not, how can solo founders strengthen their case in getting funding? Thank you.
Yeah. Yeah, we always recommend to solo founders, find a co-founder, right? And it's not because one person, it's not a good idea or it's, not the right time or the best time. Starting one of these things is hard, and you just can't do it by yourself. It's impossible. There's so much to do in the first year, 2 years of starting one of these companies. There's technical requirements. You've got to immerse yourself in the technology, if that's the foundation of it. If it's a consumer good, that you've got to really understand your supply chain today. We had a company, for example, we said before we invest, we need to know that you've actually gone to the field where they grow this product. You've gone to the factory where they process it. You've gone to the center where they package it. And you go to somebody's house to receive it. Let us know. I mean, that's the only way we could know if you even understand what's in transit. So that's one person's work for several days over time. So we would just encourage you, if you're thinking about getting funding and you're a solo founder, there's angel networks all over. There's friends and family. We always ask the founders, have you got friends and family to invest in this? And sometimes they say no. I said, well, then if your friends won't invest in this, why would I? And I get interesting answers back. But part of it is just to encourage the early stage founder. You're giving up a lot of equity if I come in, too early, and you'll regret that at some point. Go get your angel network. Spend some time with people that high net worth individuals that you meet at the club that believe in you, that know you, trust you to get started.
Lior, you want to chime in?
I mean, yeah, I have no issue with solo founder, and I think anyone can build companies. One person, 4 people, 4 co-founders, 1 co-founders. At the end of the day, it's not a democracy. You're going to have one CEO, one of the founders that's going to do it. It really depends on the company, who you are, the way that you like to run shit. For me, it's for sure it's not a non-starter to see a solo founder.
Last question I have is, can you talk about the last investment you made that you can publicly share, and what was that? What were they building? What made you excited about that investment?
Paul, what did you invest recently?
Talk about it.
I was trying to think about what can I publicly share. It's a software company. They were at 10 million run rate. They were growing at 80% annually, had great gross margins, and it's run by some very passionate co-founders. And it's still a really interesting company, exciting to watch, and I am feel privileged to be part of that team.
Yeah, what Paul is not saying, usually he's famous by investing in software, but recently all of his success is actually investing in companies that I love, but none of them is mine, so I do something wrong there. We did a company called Peak Energy. It's a company we ended up building. We brought Landon that was running the battery team at Tesla, and then he was at Northvolt. And Cam, that was a founder of us, a company called Innovix, also in the battery space, we took public. And we took both of them to build a company in the long-duration energy storage using sodium-ion as the architecture. So they're building a very large farm of energy storage.
Yeah, we invested, this was really interesting and difficult for us. We invested in a company that, think of it as a LinkedIn platform that connects academic researchers, PhD level researchers, to corporations that have deep tech projects, in many cases around AI or climate, something that the internal teams typically can't do because they're wedded to the current technology. So they reach out into these top universities, research schools, and they get a hold of these noted researchers to go do work. And they've created a platform to do that, where it's easy for the researchers to get recognized, and it's easy for the companies. We had initially thought this was a SMB kind of a play, that this would bring smart people into small businesses. In the first year, they got very large companies, Fortune 500 companies, on the platform. And the thing that I didn't realize when we made the investment is the reason why the academics wanted to get on board was because they don't make a lot of money compared to the researchers in corporations. So, and we find that there are thousands of them out there. So, and they're growing, they're doubling every 6 months or so because it's a very small company, but they're growing really, really fast. But it's in this niche that you wouldn't necessarily recognize, in day to day. It's, I don't know many PhDs, and they don't know me, but it turns out this is a very, very attractive area.
I'm going to close with some quick remarks, and that is how important relationships are, especially military veteran relationships. And Paul asked me not to do this, but I'm just going to do this simply to show kind of the importance of relationships. So I've known Paul for now 13 years, and I first met him as a first-year business school student, and he came to a class to talk a case study. And they said, oh, this gentleman is Air Force veteran, flew in the Air Force. And I was like, this is the first veteran that's come into a business school class, and he seems like he's got the life. I want to be like him. And so I came up to him after class and said, hey, I'm recently transitioned, just love your background, and that's all I said. Second data point, a year later, there's the Air Force Navy football game at Skybox Imaging. And I'm there because I'm like, hey, I need to go network. That's what they tell veterans to do. I go there. Paul Madera's there, seeing John Fenwick's company, Skybox Imaging, a company that Lior probably is familiar with, started by a veteran, Air Force veteran, and John showing us his satellites. And I'm just like, this is crazy stuff. Like, you can't be sending, these satellites into space and this will work. And Paul's asking all these great questions, like, hey, like, when are these satellites going to go up? How are they going to go up? And the whole time I'm just like, okay, like, startups are interesting, but this is too impossible. Skybox ends up being sold for, I think, $500 million to Google, and then that team's been like gone to Apple and so on and so forth. As I joined a startup called Pocket. Started focusing on a nonprofit called Services School. Fast forward from 2013 to 2016. At Services School, there's a veteran mentor that I made at business school named Les Denon, who basically was a mentor to a ton of Stanford GSB vets. And Les was like, hey, I'll donate to Services School to help enlisted veterans get into our nation's top schools, but you should also talk to my friend Paul Madera. And so when I talked to Paul, Paul was like, well, what did Les do? And he's like, okay, Les seems to vouch for you. I'll vouch for you. Go do this Services School mission. And so over the past few years, we've been working on the Services School mission. And I think Paul has been able to see, hey, we came with him with a vision, and this is what we did with it. And so in 2021, in the heart of COVID, I was like, hey, maybe this is my time to get into venture. And so Paul mentioned 99 was his time to get into venture. I was like, hey, I saw like there's a narrow window that I could possibly get into venture. And I was like, Paul, I've raised a few $1 million. However, it would mean the whole world to me for you to participate. And not only that, but I would love for you to be an advisor. Because I've seen other VC decks, I've seen startup pitch decks. Your advisors are your references, they are like your reputation, and so on and so forth. And so Paul, when he called back and said a few weeks later, he clearly was thinking about it and said he was in, I was just like, this is amazing. And so it's not too far to say that chain reaction of what Paul Madera has done is massive. Paul Madera comes in, later on we can get this other institutional LP who wants to do reference checks and so on and so forth. Second data point, Lior Susan. So Lior, there's a team member, Angela Hayward, that works with him, and she's like, oh, I know Tim does a lot of military veteran stuff. Lior reaches out to me and says, Angela and Lior reach out and say, hey, we like what you're doing for military veteran founders. So Lior said, hey, you don't need to necessarily broadcast that you're a veteran when you pitch, but when he met me, he's like, hey, love what you're doing, love backing military veteran founders, and when you see great ones, please let me know. And obviously, Israeli veteran, but he's been so reliable whenever I've needed a favor. We did this diverse VC conference. Some big name VC pulled out the last minute. Lior's like, I got you. So incredible. It's awesome to have allies, military veteran allies. And then Jim Stallings, I know through another military veteran network. And so this military veteran network is tremendously powerful, and they want to help you, but these relationships take time. And so whether it's Jim, Paul, Lior, I know so many of us, when you're in fundraising mode, you just need to get it done. And I know you've heard this already today, but try to build a relationship when you're not selling. And then maybe sell something small, prove that it works out, and then sell something big. Thank you all so very much.